presentation of TFNN.
Let's go to our first call of the day. We'll talk to John in Austin, Texas. How you doing today, John?
Way too good, Ken. How about you?
Oh, not too bad.
I know I'm like a lot of listeners. We thank you so much for helping us to earn money in the market, and Mr. O'Brien also, and what you all do at TFNN. It is absolutely huge. Appreciate it very much.
Well, I appreciate that comment very much, and I'm sure Tom does too. Thanks very much.
All the best to you and your family, man. I'm telling you, we so appreciate what you're doing. You do such a great job. This show is fantastic every day.
You're a good man, John. Really appreciate it. It makes my day. Thank you.
Okay, buddy. Take care.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, everyone. Happy Thursday. Welcome to another edition of Breakout Investing on TFNN. Bear with me as I get my chart set up here in Tiger TV. Just a little bit late today. I apologize about that. So I'm going to go ahead and start with the major averages here. We'll put up a chart of the NASDAQ composite here. Another constructive day for the market here. Just we'll start by taking a look at the VIX here. The VIX still can't get out of its own way. It's up 30 ticks today, about 2.2% to 1418, well off its intraday high of 1467. So, all right, chart should be up in Tiger TV here. Thanks very much for tuning in, folks. First of all, let me get some house cleaning items out of the way. The number to use to call if you want to talk to me. Always appreciate phone calls on the show, 877-927-6648. My show airs every day on TFNN from 3 to 4 Eastern. The show is also available as a podcast on iTunes. If you can't listen live, you can head over to iTunes and download the podcast. And don't forget, you can listen to all TFNN programming on your smartphone. Just type in tfnn.mobi in your smartphone browser. You can listen to the stream that way as well. All right, Tiger TV. Just mentioned Tiger TV. The show is carried live on Channel 1. It is archived on Channel 13. You can look at charts live right along with me, and Tiger TV is also viewable on your handheld device as well. All right, let's check in on the market here. I got to tell you, after that earnings warning from Norfolk Southern after the close yesterday, transports acting weak after FedEx issued a earnings warning or cut its earnings guidance earlier this week, I thought it was going to be a pretty rough day for stocks, but look at this NASDAQ composite here. It's an intraday low of 3156. It is now down almost 7 points, trading up near its intraday high, only down 0.2% at this point to 31.75. So still a bid underneath this market, no doubt about it. Move on, take a look at the S&P 500 here. We'll see that the index is also trading up near its session high after hitting an intraday low of 1449. Call it 1450. It is now at 1460 thereabouts, down a little more than 1 point, but showing strength as well. A little bit of volume in the market today, not too much, more so on the New York Stock Exchange. At last check, volume on the New York Stock Exchange was tracking about what was it, 10% higher? Maybe 5 to 10% higher than what we saw during Wednesday's session. Volume Wednesday on the New York Stock Exchange was pretty light at 641 million, so we're between 5 to 10% higher than that today. Looked like there was a chance we could finally see a distribution day in the market today, but as we stand right now, it is just certainly doesn't feel like distribution with indices up near their highs, and the percentage declines in the major averages are pretty small at this point. So we'll see where we close. NASDAQ volume tracking very close to yesterday, not higher, not lower, just pretty much on track. Volume yesterday on the NASDAQ was slightly above average at 1.82 billion shares. Let's check in on the financials here. Let's check in on the XLF, the Financial Select Sector Spider Fund. It's been under pressure for 4 days in a row. Nice technical breakout for the XLF recently, but coming down in mostly light volume. It's up near its session high after early weakness. It's only down 10 cents now to 15.94, so showing a little bit of strength itself. News inside the Dow today. Bank of America is going to cut 16,000 jobs by the end of the year. Let's check in on BAC. Again, this is a Dow component. It is only down 6 cents to $9.23. It's also up near its intraday high. Let's see, we had UBS downgrade several financial stocks today, so overall financials not acting too badly considering that UBS downgraded shares of Citigroup, Morgan Stanley, and Goldman Sachs, basically saying that the risk-reward proposition in the banks has become less favorable. We did get that profit warning from Norfolk Southern last night. It forecast profit of $1.18 to $1.25 a share. That was well below the consensus estimate of $1.64. We'll check in on shares of Norfolk Southern here. It's having a real rough day here, down 8.9% to 66.27, so it is not rallying back with the market. Not surprising because that's a pretty weak outlook. Norfolk Southern will report earnings on October 23rd. And again, the transport situation right now with the weak outlook from FedEx earlier this week, market is acting pretty well considering that transports are acting weak here. Check in on the iShares Dow Jones Transportation Average Index Fund. This is probably the most liquid ETF that tracks the transportation sector. It is having a very rough day, down 2.9% to 88.60. Not surprising, Union Pacific, a top-weighted stock in that fund. Railroads getting hit en masse today, but Union Pacific, the top-weighted stock, it is down 3.4% today to 120.79. We just looked at FedEx. That is the second highest-weighted holding of the IYT. 877-927-6648. We're going to take our first call for the day. Head over to New York State, Port Washington, talk to Alan. How you doing today, Alan?
Yeah, Ken, how's it going? I miss your videos on IBD. You were a tremendous asset for that.
Oh, I appreciate that very much. Yeah, I spent a good long amount of time at IBD. I still do a video. I do three videos a day at TFNN, Monday, Wednesday, and Friday. I'll do a video. I'll tape it today. It'll go up tomorrow morning. So Monday, Wednesday, and Friday, you can check that out at TFNN.com. And I also do a video once a week for The Street that appears every Thursday afternoon. It's sort of a look at the week ahead. So you can check out those videos if you wish.
Okay, very good. Okay, as a reference point, IBD called market an uptrend July 27th. So during that period, I put on like 6 stocks, like RealPage, FlightCor, VeriSign, Coors, SolarWinds, and Watson Pharmaceutical. The question is, it's been 4 to 7 weeks, and these stocks have done nothing. I bought 1 or 2%. Do you have a rule how long you hold quality stocks before you?
Well, let's just check Watson Pharmaceuticals, WPI. That's been a pretty decent performer, hasn't it been?
No. Well, I bought it on a 4-week tight, and it's barely up 1%. I mean, these 6 stocks, I'm lucky if I'm up 2%, if that. They're not doing anything. I mean, what are you doing at? I mean, I think these.
Listen, you're right that the market uptrend was confirmed by Investors Business Daily back in late July. And Al, could you just do me a favor, Alan, and turn your radio down in the background if you wouldn't mind? I'm hearing some noise in the background.
That's you in the background. Okay. Okay.
Well, it's in my ear, though. It's a little distracting. No problem. All right. So, Watson, so did you buy Watson Pharmaceuticals past that? Did you buy it in August, mid-August, late August, or did you buy it in late July? Because, I mean, this is actually a stock that I own in my Ultimate Growth Stocks model portfolio. I've been holding it for a while, but it is one that I bought, on or around that follow-through day. It was, at the time, it was a $76, $77 stock, and now it's up around $84 and continues to act very, very well in this market. So, I mean, what was your entry point on Watson? Was it at like 80, 81, something like that?
Yeah, well, I bought it on a 4-week tight, August 24th, 81.10. I bought it at 83.22. So.
Gotcha. Well, I would hold on to Watson. I mean, this is a strong stock. I'm not going to be able to go through all the 6 stocks that you have here, but I like Watson very much. If you've held other stocks and they're just kind of treading water, not doing much, really what I'm doing with current holdings, even stocks that haven't worked like I thought they would, if they're holding above support levels, whether it's the 20-day moving average, the 50-day moving average, or what have you, I'm still giving them a chance to work. But so you really have to take it. What's another? Give me another one that you're disappointed in. We'll do one more.
VeriSign, VRSN. No, VeriSign is good. I bought that July 27th, that breakout day, and that's not, and I bought it at 46.89.
And that one has so VeriSign's a good one. So you bought it at 46.89. It broke out in late August, went all the way up to about $49 a share. It has come back. It's still holding above support. You got to give this one time to work. This is another solid company that technically looks very, very solid. So, I mean, this is another one that I would continue to hold. If it breaks with conviction below that $46 price level, I wouldn't be afraid to cut it loose. But I mean, you're doing the right thing. When the market goes into an uptrend, you want to look at stocks that are moving in heavy volume, breaking out of consolidations. They're not all going to be huge winners, but between Watson Pharmaceuticals and VeriSign, those are 2 solid companies that, technically still look pretty strong here.
So I guess, you don't have a time rule per se?
Well, the only time rule I use that was a good one from IBD is if you buy a stock when it's breaking out of a base and it shoots up 20% in a short amount of time, you want to hold that for about at least 2 months' time because you could have a big market winner. The other rule I follow is if I buy a stock and it just makes a slow and steady move upward, and you have a 15-20% gain in 2 months, 3 months time, but it's just kind of a slow, steady move up. I usually take profits at 20% as a general rule of thumb. Take money off the table and move on and find another.
Okay, and the last question is, given the fact that there's a lot of time that's really not dramatic moves, do you recommend me tightening up my stops on these?
Yeah, listen, preservation of capital is always important, and I'll tell you what, Alan, if you want to shoot me an email at Ken Shreve at TFNN.com, I have an email address there. I can kind of just take a look at where you're at, where your entry points are with these stocks. I'd be happy to tell you how I would handle them from here. So feel free to do that. With VeriSign and WPI. I can't really tell you where to put the stops. That's going to be your call.
And thanks for your time.
Okay, Alan, thanks a lot. All right, Alan from New York. Had a lot of questions there. 6 stocks has been kind of working, but kind of sluggish performers. But the 2 names he talked about, VeriSign and WPI, still acting pretty well in this market. We'll be right back, folks.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN, 877-927-6648. Appreciate Pat from Florida hanging on through that break. How you doing today, Pat?
Yeah, how you doing, Ken? Great, thank you. I just wanted to say initially, I just signed up for your newsletter and give that a go. Looks good so far. But my general question today is, do you have any opinion right now of where gold is at? I'm thinking of something around like a GDX. Do you have an opinion on an entry on that, or where do we stand with gold? I want to buy something gold involved without trading it, maybe hold it for a while.
Okay. All right. So
at this point.
Okay. So the GDX, the Market Vectors Gold Miners Fund, I'm really not interested in that one right now. The buy here was at 48 when it broke out in heavy volume. So it's extended now. You're looking at a fund that's trading up around 54.21. So if it moves sideways and forms a little base here and holds gains around that 53, 54 area, you could get an entry point. But you know, if you want to own gold, I mean, one ETF that I'm still watching is the most liquid one, the GLD, the Spider Gold Trust, because if you look at a weekly chart of the GLD, Right now, it's trading around 171.40. So on Tiger TV, I'm going to take a look at the Spider Gold Trust, and what you see here is the right side of a base forming. It could try to take out that 174 level, and then you would have a kind of a bona fide technical breakout here. So I kind of like the GLD here. It's not ready yet, but if it takes out that swing point of 174 in heavy volume, which is a possible scenario if the dollar continues to stay weak, that is probably where I'd go in the gold market.
I got you. Okay. So right about now, then it looks good then.
Well, it's at it's at 171.40 right now. So when I buy a stock for the Ultimate Growth Stocks model portfolio, or I buy an ETF, I tend to buy as volume is rolling in and as a stock is clearing a swing point. I try not to cheat too much, but the GLD so far is holding up very well, just like the GDX is too. But the GLD could be on the cusp of a meaningful upside breakout here. But again, that's going to be predicated on if the dollar stays weak, and from what I can see, the dollar, dollar still can't get out of its own way here. So I would just wait on the GLD and just watch it for a little while longer, and if it can take out that 174 level, looks pretty good.
Okay, thank you much, Ken. Thank you very much. Bye bye.
All right, Pat. Thank you. All right, moving on to my man Joe in Boston. How you doing today, Joe?
I'm doing well, Ken. How are you doing?
Pretty good. Thanks for the call.
No problem. Hey, I wanted your take on this candle in MA today. When you get that tight trading action, and then you get kind of an outside day like this. So, how do you read that?
Listen, I mean, I mentioned MasterCard on the show yesterday. I'm not sure you were listening, but I like the fact that for 4 straight days, I mean, it was up nicely, for several days in a row, and then it just starts drifting lower in light volume this week, and then you had a breakout attempt today over, what was it, 456, something like that, and it's trying to. Here's my take on MasterCard. I don't like the fact that earnings and sales growth has been decelerating. I put a tweet out there earlier today saying that MasterCard's chart looks okay. It's come back to life. Uncertainty in Europe is starting to abate, at least somewhat. They have big exposure over in Europe, so buyers have been coming back into the stock. But the bottom line is that over the past 3 quarters, you're seeing earnings and sales growth decelerating. And then the company came out even today and forecast weaker sales in the second half of this year. So, there's just some uncertainty here in MasterCard. Technically, it looks okay. If it were really a strong breakout today, it would not be kind of showing an outside day here. I mean, it would be trading meaningfully, up near its high, 459, 460, if not higher. So, I'm not in love with the stock. I thought it had a chance to work nicely, but it really fizzled. It's trying to come back with the market here, but I'm kind of lukewarm on it. It's good company, but just kind of lukewarm on it here.
Okay.
All right. All right, Joe. Thank you. Bye. Yeah, so, I mean, I'd be more encouraged by MasterCard if it really took out that swing point with conviction. And the bottom line is that it's not doing that right now. The swing point for MasterCard, like I said, was in the 456.50 in that area. So if it was a breakout with conviction, I'd be singing a different tune on MasterCard. But today is not a breakout with conviction. And plus, like I said, the company came out earlier today and projected pretty soft sales between now and the end of the year. Sales growth decelerating in recent quarters. Just, some negatives that are worth paying attention to here. All right, folks, headed into the next break. Long segment coming up next. Give me a call. We'll be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Kate Stalter's exciting newsletter, Low Price Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about technical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Thanks very much to Alan, Pat, and Joe for getting the program off on a solid foot with some good phone calls. 877-927-6648. Checking in on crude oil today. Not much movement, down 0.1% to 91.87 a barrel. Let's check in on the USO. This is an ETF that basically tracks the spot price of West Texas Intermediate light sweet crude oil. Down about 7% in the past 4 trading sessions, so it is rallying back a little bit today, up 33 cents to 34.45, but stuck underneath a couple of resistance levels here at 34.75 and also 36.59. So the chart of USO looks broken for now. Taking a look at gold, we talked to Pat in Florida about the GDX. Gold for December delivery, not much movement here either. Lost $1.50 today, 0.1% to finish at $1,770.20 an ounce. December silver, we don't talk about silver much, but it bucked the trend today. It was up 0.3% to $34.68 an ounce. Let's check in on the GLD here. I know we did that earlier, but check in one more time here. GLD right now down 32 cents to 171.42. Holding gains smartly here after making a big move last week on the Fed announcement. Checking in on bonds here. Let's take a look at the TLT, the iShares Barclays 20-plus year Treasury Bond Fund. Bonds have been moving higher for 4 straight sessions, giving back a lot of their gains today. The TLT is up 16 ticks to 121.27. Yields down slightly. The 10-year note at 1.75%. The 30-year bond also down slightly to 2.93%. Mentioned the earnings warning last night from Norfolk Southern. The railroads are very weak today. The transportation sector not looking too hot here. A lot of people debating, what does it mean? Is the U.S. economy in worse shape than we think? You know, again, this is just a matter of really looking at paying attention to price and volume in the major averages, because if you do that, you still see a market here that is acting right, and that is important to keep in mind here. So transport's weak today, but indices performing pretty well. Also a pretty weak reading from the Philly Fed earlier today. I thought it was going to come in worse than expected. It actually came in a little better than expected. Philly Fed came in at minus 1.9. The estimate was for a reading of minus 0.4. So still, the Philly Fed Manufacturing Index has been in contraction mode for 5 straight months now. We also had weekly jobless claims come in at 382,000, down from an upwardly revised 385,000 the prior week. Economists were expecting claims to come in around 375,000. So nothing alarming there. We had weak manufacturing activity in China. The HSBC Flash Purchasing Managers Index came in at 47.8. It's been in contraction mode for 11 straight months. So 47.8. It was up slightly from a final reading of 47.6 in August, but still below July's level. Not a whole lot to like about China, but let's take a look at Mindray Medical, U.S.-listed stock, trades on the New York Stock Exchange. Mindray Medical is a medical device maker, operates in 3 segments: patient monitoring and life support products, in vitro diagnostic products, and also medical imaging systems. Not a bad technical setup here at all. Mindray is up 25 cents today to 34.80. Let's take a look at a weekly chart for Mindray. We'll see a pretty nice picture here. See a big move for the stock right here, and coming right down to its 10-week moving average. So this is an example of a strong chart in the market, a stock that could deliver more price strength if buyers continue to come into this market. But the fact that it has been moving sideways for almost 6 weeks now and holding above that 10-week moving average makes it a compelling technical setup at this point. So we'll keep an eye on this one for a possible upside move over $36 a share. Interesting to see the divergence in the some of the China major averages here. Let's take a look at the Hang Seng, because the Hang Seng index has actually been moving nicely here. You can see a nice rally for the Hang Seng. In fact, I'm a little disappointed because this stockcharts.com doesn't give me volume for the Hang Seng index. Not surprising, but I suspect that we probably saw some follow-through in the Hang Seng last week at some point. You can see a huge move off the bottom here, day one of a rally attempt. So it looks like you had some follow-through here last week on Friday. But when you look at the Hang Seng alongside the Shanghai composite, let's look at the Shanghai here, and the Shanghai still can't get out of its own way. So 2 completely different looking charts, 2 China stock indices, one definitely catching a bid, the Shanghai Shanghai Composite still not looking good at all from a technical perspective. So Hang Seng good, Shanghai not so good. But in China, not much in the way of buying opportunities, but I do like the look of Mindray Medical here, ticker MR on the New York Stock Exchange. Couple of headlines today. Walmart no longer going to sell Kindle tablet computers and e-readers. There's obviously tension between Amazon and a lot of these brick and mortar retailers. Remember earlier this year, Target made the same decision. They're not going to carry the Kindle any more. Both Target and Walmart, they're just not able to achieve the same sales and margins as Amazon. Amazon is certainly a bona fide competitor to both Walmart and Target. And I remember Target earlier this year. So, I mean, basically I think it was more like the company did not want to be a showroom for people who would come in and look at the Kindle and then they would buy it at Amazon online. So Walmart no longer carrying the Kindle, following the lead of Target, who made the same decision earlier this year. See how Amazon is reacting on that news, and I suspect not much. Let's see here. Amazon, yeah, still holding near highs here. Only down $1.57, 0.6% today to $260.11. Amazon sells the bulk of its Kindle tablets and e-readers on, obviously, its own website. So the fact that Target and Walmart are no longer carrying the Kindles, I mean, if this were fundamentally a problem for the company, you'd see a lot of sellers in Amazon today, and that is not the case at all. Let's take a look at Starbucks, SBUX. Starbucks up nicely today, 2% gain to 51.13. Earlier today, the company introduced a single cup coffee machine where consumers will be able to make their own lattes at home with real milk. The device is called Verismo, and they're available now for sale at Verismo.com. They'll be in Starbucks stores later this month, and other retail locations will start carrying the single-cup coffee machine from Starbucks, Sur La Table, Williams-Sonoma, and Macy's in October. I think Bed Bath & Beyond is in there as well. So good day for Starbucks. You can see the stock recently firmed up at its 50-day moving average here. So yeah, not a stock I'm interested in owning right now, but a good high-quality name with a very strong balance sheet. Couple of new issues to talk about today. Let's take a look at TRLA, the online real estate marketplace. Trulia, boy, the CEO really got a grilling on CNBC earlier today by Jim Cramer and also David Faber, asking him very tough questions, asking him to be more specific about certain answers he was giving. But give Trulia credit, a very solid debut for the stock. It raised $102 million by offering 6 million shares last night at $17 a share. That was above the proposed range of 14 to 16. Stock right now trading at $23.76, so good for a gain of $6.76, almost 40% on the day. So great debut for Trulia. Let's check in on a major competitor for Trulia, Zillow. Ticker Z on the New York Stock Exchange. Shares of Zillow. Boy, this one, it's a volatile stock. I really would like to. I mean, this is a company that I really like. The growth prospects are solid. It has the look of an emerging leader. It's up 1.4% today to 46.20, but it had this really rotten day of price action last week where it reversed off its high, failed breakout, finished near its session low, but it has turned around this week and is back in rally mode. Let's take a look at a weekly chart for Zillow, and what you have here is a good solid technical breakout from what looks to be a first stage IPO base over 44. So volatile stock here. Signs of definitely that funds are in here buying, so Zillow looks pretty good. The buy point was 44. It is at 46.19 right now, so it's getting to that point where it's borderline extended, but good high quality name here in Zillow. Let's also take a look at SUSP, another new issue today, first day of trading. Susser Petroleum Partners, it's a wholesale distributor of motor fuels. It priced 9.5 million shares last night at $20.50. The proposed range was 19 to 21, so mostly inside the range. It's having a good day as well, up 12% today to 22.93. So a couple of IPOs doing well today. On the earnings front, let's check in on shares of Adobe Systems. Remember, in after hours yesterday, the stock was lower, but Adobe making a big move today, up 4.1% to $34.47. Earnings were in line, 58 cents a share, up 5% from a year ago. Sales were also in line at $1.08 billion, up 7% from a year ago. For the current quarter, the company expects revenue in a range of $1.07 to $1.12 billion. That is a little bit below expectations, actually, and it forecast a profit of 53 to 58 cents a share, also below estimates, but buyers don't seem to mind today because Adobe is having a solid day today, and you do have the stock breaking out, or gapping up, I should say, over a swing point of 34.09 in strong volume. So for technical investors, this one is still within buying range because you have a swing point of 34.09 and the stock at 34.47. The issue here, again, for my Ultimate Growth Stocks model portfolio, I really demand innovation. I want to see good, strong bottom line and top line growth, and Adobe is one of those more mature companies, great brand, still selling a lot of great product in the software field, but again, single-digit sales growth this time around, and kind of growth prospects that are so-so. I think just there are better growth stocks out there for my model portfolio at this point. Not such a great day for shares of Bed Bath and Beyond, BBBY. The ticker symbol here, Bed Bath & Beyond, really getting crushed today, almost down 10% to 62.06. Earnings up 5% to 98 cents a share. That was below the consensus estimate of $1.02. Sales up 12% to $2.59 billion. That was slightly better than the consensus estimate of $2.54 billion. Also, Conagra Foods, we had earnings from that company as well. Conagra, big gap up for the stock today, trading in the bottom half of its trading range after early strength today, but still up 6.2% to $27.24. Good growth here, earnings up 42% to 44 cents a share. That's about 8 cents above the consensus estimate. Sales were up 7% to $3.31 billion. Also better than expected, Conagra raised its 2013 profit outlook to a range of $2.03 to $2.06 a share. The consensus estimate was for $1.98. Let's check in on shares of Apple here. Let's check in and see what Apple is up to today. Sellers were in Apple for... Don't I have a chart for Apple? I swore I do. Let me see here. APP. Boy, that is... That's strange. I guess I don't. All right. Well, AAPL. Let's take a look at shares of Apple today. Stock just, holding gains nicely up here. Tried to sell off a little bit today, but, still holding above the 10-day, 20-day moving average. Apple not really showing any sell signals. It is down $4.19 today to $697.91. At this point, listen, I would not be surprised to see Apple start to pause, consolidate, digest gains. I really feel that could happen with a lot of stocks right now. That's why, on the one hand, I wouldn't be surprised to see a little bit of a market pullback. But as I've been saying this week and in recent shows, I think that any pullback that we get should be fairly contained, maybe 2, 3, 4%, something like that, and really would just be the pause that refreshes. I think we still could have a good end of the year for stocks. So Apple tried to sell off. It hit an intraday low today of 693.62, but it is trading in a tight range, holding near highs, just like Google. Let's take a look at Google here. Another stock that is very, very extended. I would not touch Google up here. This one probably needs to base and consolidate for a while, but still holding gains nicely at 727.15, only down 35 cents on the day. All right, folks, headed into the final break. We'll be back in 3 to 4 minutes. Stick with me. Ken Shreve with you. Breakout Investing. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, everyone, to Breakout Investing on TFNN. 5 minutes left to go in Thursday's session, and let's see, we've got the NASDAQ Composite down 10 points, 0.3% to 3172, trading slightly in the top half of its trading range. Another tight range today for the NASDAQ, holding gains nicely. Overall, pretty impressive for the market, I would say, despite some unsettling headlines. Again, the earnings warning not only from FedEx earlier this week, but also from Norfolk Southern after the close last night. So there are concerns about third quarter earnings season. Certainly what we've heard from a couple of the transports this week. Not good news, but before we get too pessimistic about third quarter earnings season, let's pay attention to what the market is doing here. And, it's still a market where distribution, professional selling, institutional selling is virtually non-existent. The S&P 500 right now down about 2.5 points, 0.2% to 1458, trading in the top third of its intraday range as well. Haven't looked at the Dow. Let's take a look at the Dow Jones Industrial Average, and it is slightly higher on the day, up 6 points to 13,584. So the Dow also holding gains as well. All right. Take a look at MLNX. A lot of stocks starting to pay visits to their 50-day moving average. Interesting to see Mellanox firming up at that key support level here. You can see for almost 2 weeks now, Mellanox up $2.62 today, 2.5% to 107.24. Still not interested in owning this stock. It has made a major move. It is showing good supporting action at its 50-day moving average, but a name like this I would much rather buy on a base breakout, not coming back to support. So even though Mellanox is holding up pretty well technically, I'm going to take a pass for now, but still a very solid company here with solid growth prospects. They're based in Israel. It's a chip company that designs interconnect products for computing, storage, and communication applications. And another name looking good here is Dollar General. Dollar General reclaims its 50-day moving average today. Dollar General, interesting because it's working on the right side of a base here. Let's take a look at a chart here. Different perspective. See that Dollar General is approaching resistance at 52.97. It's at 52.49. So could see Dollar General try to take out that 52.97, the high set back here in early August. So Dollar General doing a good job of fixing itself technically as well. Some other names out there acting pretty well. Let's take a look at Elizabeth Arden. Good volume in Elizabeth Arden today. Interesting. Kerrison Company initiated coverage with an above average rating. I haven't heard too many analysts with an above average rating. So I guess if they were to downgrade the stock, it would be to a needs improvement or something like that. But Elizabeth Arden having a good day today. Another decent technical setup here. It is holding above its 50-day moving average, up 3.6% today to 45.55. Let's take a look at a weekly for Elizabeth Arden, and we'll see, again, a stock that looks pretty good here from a technical perspective. Big breakout you can see right here, moving sideways, firming up at its 10-week moving average. This one looks pretty solid here. So still seeing a fair amount of decent setups in the market here. Coming up after the close, let's take a look at Oracle, see what Oracle is doing ahead of its earnings report. Profit at Oracle is expected to come in at 53 cents a share, up 10% from a year ago. Sales up less than 1% to $8.4 billion. Oracle under selling pressure ahead of the results, down 1.7% to $32.24. Coming up next, folks, the Tom O'Brien Show, 4 to 6 Eastern. Appreciate you very much listening to Breakout Investing. I'll be back here tomorrow, 3 o'clock Eastern. Have a great afternoon.